Breaking news just dropped, and it's sending shockwaves through the entire US auto industry. General Motors has unleashed a massive bombshell move, huge discounts on its trucks, and this isn't just another sale. This is a strategic strike that could reshape how Americans buy vehicles. GM is slashing prices on some of its most popular trucks, and we're talking thousands of dollars off sticker prices. Silverado, Sierra, and heavy-duty models are suddenly far more affordable, and that changes everything. Dealers are scrambling, competitors are watching closely, and buyers are realizing this might be the moment they've been waiting for. So why is GM doing this right now? Simple. Pressure is building. Inventory levels are high, interest rates are squeezing buyers, and EV competition is heating up. GM isn't waiting around. They're choosing to dominate the conversation by making their trucks irresistible, and it's forcing the entire market to react. Ford, Ram, Toyota, none of them can ignore this. When GM moves first and moves big, rivals either follow or risk losing market share. That means price wars could be coming, incentives could explode, and truck buyers may suddenly have more power than they've had in years. But here's where it gets even more interesting. These discounts aren't just about clearing lots. This is GM protecting its long-term dominance in trucks, the most profitable segment in America. Trucks fund everything, from EV development to autonomous tech, and GM knows it can't afford to lose ground. For consumers, this could be a golden window. Payments drop, negotiating power rises, and dealers may be more flexible than ever. People who were priced out just months ago are suddenly back in the game, and that's exactly the shock GM wanted to create. The big question now is how far this goes. Will other automakers match GM dollar for dollar? Will discounts spread beyond trucks into SUVs? And what happens if demand still doesn't surge fast enough? Because if this move doesn't work the way GM expects, the next steps could be even more aggressive. And that's where the real industry shakeup begins. And make no mistake, dealers are already feeling the pressure. Sales managers are reworking numbers on the fly, lots are getting busier, and phones are ringing with one question over and over. How long will these discounts last? That urgency is intentional, because GM knows hesitation kills momentum, and momentum is exactly what they're chasing. At the same time, this move exposes a bigger problem facing the auto industry. Trucks have gotten insanely expensive, and buyers are pushing back. GM's discounts are a clear signal that pricing hit a breaking point, and now the correction may be starting. Once prices fall, it's nearly impossible to push them back up without backlash. And here's the domino effect nobody is talking about yet. Used truck values could take a hit. When new trucks suddenly become cheaper, trade-in values shift, leases get recalculated, and the entire resale market feels it. That alone could ripple through banks, lenders, and leasing companies nationwide. Wall Street is watching closely too. Profit margins may tighten in the short term, but market share is king. If GM locks in buyers now, especially first-time truck owners, the long-term payoff could be massive. This isn't panic, it's calculated aggression. Meanwhile, consumers are waking up to the power shift. Buyers who were told take it or leave it just a year ago are now hearing, "What can we do to earn your business?" That tone change is everything. And it signals that the balance of power is tilting back toward the customer. And if interest rates cool even slightly while these discounts stay in place, demand could spike fast. That's when lots empty, incentives vanish overnight, and anyone still waiting gets left behind. GM knows this window is narrow, and they're betting big that acting first gives them the advantage. But the real test is what happens next month, and the month after that, because once one automaker blinks, the rest usually follow. And when that chain reaction starts, the US auto industry doesn't just adjust, it transforms in ways no one sees coming yet. And there's another layer to this story that's flying under the radar. These discounts are landing at the exact moment when buyers are questioning the future of gas trucks altogether. EV headlines are everywhere, regulations are tightening, and yet GM is doubling down on combustion trucks by making them impossible to ignore right now. That tells us something important. GM still believes trucks are the backbone of American driving culture, and they're not ready to let that cash machine slow down. By pulling buyers in today, GM locks them into service plans, parts, accessories, and brand loyalty for years, even as the industry shifts. This also puts massive pressure on smaller dealers and regional brands. Not everyone can afford to slash prices this deep without bleeding cash. That means consolidation could accelerate. Weaker players could struggle, and the market could become even more dominated by the giants who can afford these battles. And watch the timing closely. End-of-quarter targets, looming model year changeovers, and slowing foot traffic all collide right here. GM's move isn't random. It's perfectly timed to reset expectations before competitors can respond with their own narrative. Buyers who understand what's happening are already strategizing. They're comparing trims, stacking incentives, and negotiating harder than they have in years. Information is the weapon now, and GM just handed consumers a loaded one. But here's the tension point. If these discounts spark a buying surge, supply tightens. If they don't, GM may have to go even further. Bigger rebates, longer financing terms, even more aggressive incentives that push the industry closer to a full-blown price war. Because once confidence cracks in a high-margin segment like trucks, automakers don't just fight to win, they fight to survive. And the next move could redefine what expensive truck even means in America. And this is where the psychology of the buyer becomes the real battleground. When people hear massive discounts, they don't just think savings, they think leverage. They walk into dealerships differently, they ask sharper questions, and they're no longer afraid to walk away, because they know options are finally on their side. Dealers now have to balance urgency with control. Move inventory too fast, and margins disappear. Hold back, and buyers jump to the next lot offering a better deal. That tension is playing out in real time across the country, and it's exhausting the old playbook that's been used for years. At the same time, social media and YouTube are amplifying everything. One viral deal, one screenshot of a discounted truck, and suddenly, thousands of buyers expect the same offer. Transparency is accelerating the chaos, and GM knows once the internet gets hold of a price shift, there's no putting it back in the box. Fleet buyers are watching closely too. Construction companies, logistics firms, small businesses, these are bulk buyers who move markets fast. If they jump in while prices are down, it could drain inventory faster than expected and force competitors into reaction mode almost overnight. And don't overlook the impact on future models. If today's trucks are discounted heavily, expectations for next year's pricing drop as well. That reshapes launch strategies, marketing plans, and even feature packaging. Because once consumers reset their value expectations, automakers have to chase them. This isn't just a sale, it's a stress test. A test of demand, pricing tolerance, and brand loyalty. GM fired the first shot, but the real story is how everyone else responds, because the next moves will decide whether this moment becomes a temporary shakeup or the start of a completely new era for trucks in America. And here's where the stakes get even higher. If this pricing shock works, GM sets a new benchmark for what trucks should cost in a post-pandemic, high-rate economy. That alone could undo years of steady price inflation and force the entire industry to rewrite its expectations. Automakers have spent years training buyers to accept higher prices as normal. Now that illusion is cracking. Once consumers realize discounts like this are possible, the fear of missing out flips direction. Instead of rushing to buy, they start waiting for the next deal. And that mindset is dangerous for manufacturers. This also creates tension inside GM itself. Engineering, marketing, finance, everyone feels the ripple. Future budgets get tighter, feature lists get scrutinized, and every dollar suddenly matters more. Big discounts don't come without internal consequences, even for a giant like GM. And watch how advertising changes. You'll see louder messaging, bolder claims, and more aggressive comparisons. When prices drop, the fight shifts from prestige to value, and that's a battlefield GM is confident it can win. Consumers sitting on the sidelines are now asking a different question. Not, can I afford a truck, but how much better can this deal get? That hesitation could either stall the market or force automakers to keep pushing harder. Because once pricing pressure reaches this level, there's no quiet exit. Either demand roars back to life, or the industry slides further into a discount-driven showdown that reshapes profits, power, and consumer expectations in ways that won't be easy to reverse, especially as the next wave of announcements starts rolling in. And now the ripple effects are creeping into places most buyers never think about. Suppliers, logistics companies, and parts manufacturers are all tied to truck volume. If GM moves more units at lower prices, the entire supply chain shifts, contracts get renegotiated, and cost structures start changing behind the scenes. Labor is another pressure point. Higher sales volume can mean more shifts, more overtime, and more strain on factories that were already walking a tightrope. If demand spikes too fast, production bottlenecks appear. If it doesn't, cuts become a real conversation. Either way, GM's decision forces movement. There's also a timing battle happening with EVs. Every discounted gas truck sold today potentially delays an EV sale tomorrow. GM is betting that near-term cash flow and market dominance matter more than a perfect transition timeline, and that gamble could influence how other automakers pace their electric strategies. Dealers are quietly adjusting behavior too. Some are pushing add-ons harder, others are stripping deals down to bare numbers to close volume. The experience varies wildly by region, which only fuels more buyer research and more online deal sharing. And pay attention to incentive stacking. Manufacturer rebates, dealer discounts, loyalty bonuses, financing promos. When these start piling up, the real price gap becomes even wider than headlines suggest. Buyers who know how to stack the right offers could walk away with deals that would have sounded impossible just months ago. All of this builds toward a critical moment. When the next sales data drops, analysts won't just be looking at units sold, they'll be watching margins, inventory turnover, and how quickly competitors react. Because the next response, whether it's matching discounts or refusing to budge, will signal where the industry is truly headed as this high-stakes pricing battle continues to unfold. And the silence from GM's competitors right now is just as loud as the discounts themselves. No immediate counterpunch, no official statements. That usually means one thing: they're calculating, not ignoring. Every automaker is running the numbers, trying to decide whether to follow GM or hold the line and risk losing buyers fast. This hesitation creates a temporary power vacuum, and GM is exploiting it. The longer rivals wait, the more buyers GM locks in. Brand switching becomes easier when price gaps widen, and once a customer crosses over, winning them back is never guaranteed. There's also a generational shift happening underneath all of this. Younger buyers, especially first-time truck owners, are more price-sensitive and less brand loyal than ever. GM's move speaks directly to them, and capturing that demographic now could pay off for decades. Financial institutions are reacting too. Lower transaction prices affect loan structures, lease residuals, and risk models. Banks don't like surprises, and sudden pricing shifts force recalculations across the board, which can tighten or loosen financing options depending on how this plays out. And don't overlook regional differences. Truck-heavy states like Texas, Michigan, and the Midwest are ground zero for this battle. What happens there often spreads nationwide, and early trends from those markets could signal whether this strategy is gaining traction or facing resistance. The longer this standoff lasts, the more pressure builds for someone else to blink. And once that happens, once another major automaker jumps in with matching or deeper cuts, the industry crosses a line it can't uncross, pushing this showdown into its most volatile phase yet. And as this escalates, consumer confidence becomes the wild card. If buyers feel secure in their jobs and finances, these discounts ignite demand fast. If uncertainty lingers, even massive price cuts might not move the needle the way GM expects. That balance will decide whether this strategy becomes legendary or risky. Marketing departments are already pivoting. Messaging is shifting from premium toughness to smart value, and that subtle change speaks volumes. When value becomes the headline, it signals a deeper shift in how trucks are being positioned in the American market. Behind closed doors, analysts are modeling best-case and worst-case scenarios. Best case, GM clears inventory, boosts share, and stabilizes pricing later. Worst case, competitors undercut, margins evaporate, and the industry gets stuck in a discount cycle that takes years to escape. And buyers are learning fast. Forums, comment sections, and dealer feedback loops are filling with real numbers, not estimates. Once real pricing becomes public knowledge, the negotiation floor rises for everyone, not just GM customers. There's also the long memory factor. Buyers remember who gave deals when times were tight. That goodwill can outlast a single purchase cycle and influence repeat buying, service loyalty, and brand advocacy long after the discounts fade. All of this is unfolding in real time, and the next few weeks matter more than most people realize. Sales data, competitor reactions, and consumer behavior are about to collide, and whatever comes out on the other side will shape not just truck pricing, but the future rhythm of the entire US auto market as this high-stakes experiment keeps building, and now the industry is approaching the point of no return. Once pricing expectations reset, there's no rewind button. Even if discounts disappear, buyers will remember what was possible, and that memory alone changes how every future deal gets negotiated. GM's move is also testing dealer loyalty. Franchises rely on healthy margins to survive, and deep discounts squeeze that margin hard. Some dealers will embrace volume, others will quietly resist. That internal friction could reshape dealer strategies for years. Watch how incentives evolve week by week. First, it's cash rebates. Then it's low APRs. Then it's extended terms and bundled perks. When incentives start layering like this, it signals that automakers are pushing harder than they publicly admit. There's also a branding risk. Trucks have long been symbols of power and status. Aggressive discounts can blur that image, turning a prestige product into a bargain product if not handled carefully. GM is walking a fine line between accessibility and overexposure. Meanwhile, competitors are running out of time. Every day they stay silent, GM captures mindshare. Buyers associate action with leadership and hesitation with weakness. That perception alone can influence sales beyond the actual price difference. The next catalyst could come from anywhere. A surprise earnings report, an unexpected rate cut, a rival's emergency incentive rollout. And when that catalyst hits, this situation won't just evolve, it will accelerate, pushing the entire industry deeper into a pricing battle that's far from finished and only getting more intense as the next wave of moves begins to surface. And here's the twist most people aren't prepared for. If this discount wave succeeds, it becomes a blueprint, not just for trucks, but for how automakers respond to economic pressure going forward. Fast, aggressive, headline-grabbing moves instead of slow, quiet adjustments. That changes consumer behavior permanently. Buyers start timing the market instead of rushing in. They wait for the signal, they expect the bombshell. And once that mindset takes hold, automakers lose the luxury of predictable demand. GM is essentially daring the market to blink first. Either demand surges and validates the strategy, or competitors crack under the pressure and flood the market with their own incentives. Both outcomes still force change, and that's the power of moving first. Behind the scenes, pricing teams are already gaming out the next step. If inventory drops too slowly, discounts deepen. If it drops too fast, incentives vanish overnight. That kind of volatility keeps buyers glued to headlines and dealers on edge, and the messaging will only get louder. Bigger numbers, stronger language, more urgency. When automakers fight for attention, subtlety disappears, and the buyer becomes the ultimate judge of who wins. This is no longer about one company or one sale. It's about control, of narrative, of pricing, of momentum. And as this pressure builds, every new data point, every competitor move, and every buyer reaction pushes the industry closer to its next critical turning point, where the real consequences of GM's bombshell start to reveal themselves in ways no one can fully predict yet. And as that turning point approaches, the emotional side of buying kicks in harder than ever. Excitement, fear of missing out, and hesitation all collide. That emotional pressure is exactly what drives sudden spikes or sudden stalls in sales, and GM is betting it leans in their favor. Dealership floors are turning into pressure cookers. Sales teams are juggling urgency with reassurance, trying to close deals without spooking buyers who think an even better offer might drop tomorrow. That uncertainty alone is reshaping how deals get done. The media narrative is shifting too. What started as a pricing story is becoming a power story. Who controls the market? Who sets the tone? And who's reacting instead of leading? Those perceptions matter more than most realize. There's also a policy angle creeping in. Incentives at this scale attract attention from regulators and industry groups watching pricing stability and market fairness. It's not a crisis, but it's a reminder that massive shifts never happen in isolation. Meanwhile, buyers who act early may feel like winners until the next discount hits. That creates a delicate balance. Push too hard, and you risk buyer regret. Pull back too soon, and momentum dies. GM is threading that needle in real time. Every move now carries amplified consequences. One misstep, one misread of demand, and the entire strategy could flip from bold to reckless in public opinion. And with the spotlight this bright, The next announcement, the next earnings call, or the next competitor response could instantly change the trajectory of this unfolding showdown as the industry holds its breath and waits for what comes next. And that's why this moment matters more than any single discount or headline number. What we're watching is a live experiment in power, pricing, and perception. GM didn't just cut prices, they challenged the entire industry to respond under pressure. If competitors match the discounts, margins shrink and the price war becomes official. If they don't, GM walks away with momentum, loyalty, and a bigger slice of the truck market. Either outcome reshapes the battlefield. For buyers, this is a rare shift in leverage. Information, timing, and patience suddenly matter more than brand loyalty alone. The smartest consumers will watch closely, move strategically, and understand that deals like this don't exist in a vacuum. They're signals. For dealers, this is survival mode mixed with opportunity. Volume versus margin. Speed versus stability. The choices made right now could define which dealerships thrive and which struggle when the dust settles. And for the industry as a whole, this is a warning shot. The old rules don't apply the same way anymore. High prices without resistance are no longer guaranteed. Consumers have pushed back. And GM just proved that pressure works. The next few moves will tell us everything. Sales numbers, competitor reactions, incentive escalations or pullbacks. Each one will reveal whether this was the opening chapter of a new pricing era or the spark that ignites a full-scale transformation. Because once the market realizes it can be shaken this hard, this fast, there's no going back to business as usual. And whatever happens next will redefine how trucks are sold, priced, and fought over in America for years to come.